things that we can afford, we spend too much with money we don't have. Our society is one of consumerism, and our consumerism is backed by debt.
American homeowners, they're getting killed. What does this mean? They're not going to go to Walmart and shop. They're not going to be going into more debt. They may not be able to pay their mortgage. 45% of the world's wealth has disappeared.
We're talking hundreds of thousands of jobs lost each month. U.S. stock values lost $2.6 trillion in the first 2.5 months.
U.S. stock values have dropped $11 trillion since September of 2007.
The U.S. financial markets are terrified of President Obama's tax and spending plans. Who would have thought that AIG, with Lehman Brothers, Bear Stearns would have gone under? Thought that Merrill Lynch would have to be bought out by Bank of America.
Had the stock bubble first, 1995 to 2000. It burst in March of 2000. And from then till October of 2002, we saw the stock market drop $8.5 trillion, and many investors and retirees lose 50% or more of their retirement assets.
What's happened in the stock markets of around the world. Iceland, of course, is bankrupt nationally, and their stock market's down 94%. Japan, their stock market is down 84%. Russia, down 80%. China, down 68% from peak to trough. Korea, 47%. Argentina, 56%.
Japan's stock market is down since its peak in 1990. It's down 84%. But the Fed came in and they pumped more money into the system, and they knew exactly what they were doing. They were going to create the next bubble, and that was the real estate bubble.
U.S. foreclosures were up 30% in February of 2009.
U.S. banks are sitting on 700,000 unsold foreclosed homes.
The bailout of 7 to 9 million U.S. homeowners will not stop the U.S. real estate collapse. That we are in a financial crisis comes as no surprise. We've just finished the greatest debt binge in world history, both private, corporate, and governmental. Government debt having risen in that period of time from $1 trillion to now $10.5 trillion. Again, derivatives have been a major part of this.
The modern derivatives bubble is a creation of Wall Street, a highly leveraged paper pyramid.
Who would have thought that AIG would have gone under, an insurance giant? Who would have thought that Lehman Brothers would have gone under? Who would have thought that Bear Stearns would have gone under? Who would have thought that Merrill Lynch would have to be bought out by Bank of America? We have a $500 to $800 trillion derivatives market, and actually it's estimated as high as 1.2 quadrillion. Number that's hard to wrap your mind around, but 1.2 quadrillion on the upside in terms of what that market represents.
World trade is collapsing. Japan's exports have plunged 45% in the last 12 months, the biggest drop in 52 years. Their exports to the United States have just dropped 53%, 47% to Europe. China's exports have just dropped 26%. China's trade surplus has gone from about $40 billion a month down to a little over $4 billion a month, a 90% decline. Hong Kong's exports are down 30%.
JP Morgan Chase, $90 trillion in derivatives exposure. Bank of America, $38 trillion. Citigroup, $38 trillion. Wachovia, $4.9 trillion. HSBC, over $4 trillion. Wells Fargo, over $1.5 trillion. I mean, again, when you're comparing 90 trillion to $1.5 trillion, Wells Fargo seems to get off light, but we're still talking about $1 trillion. We're still talking about $1.5 trillion of leveraged exposure to an ultra-frail market. That's just the absurdity of the place we've gone. To compare the current financial crisis with the 1930s is a little bit naive, because in the 1930s you didn't have hundreds of trillions of dollars worth of value in the stock market, the bond market, and the equities market. And today, to have lost 45% or more of total net worth in the world is unprecedented, far surpassing anything that was lost in the 1930s.
You're going to get so many mixed messages from Wall Street and the financial media, most of whom are trying to be optimistic and say this is not so bad, it's not going to last so long. And these are the same people that were telling you that there was going to be no recession, there was going to be no depression, there was going to be no downturn in the stock market. So now they're saying, well, okay, so there is a bit of a downturn, but it's short term.
American homeowners, investors, retirees, they've been decimated. How? They've been decimated because you've had real estate values and stock values implode at the same time.
So we're seeing people all across the spectrum get wiped out, and it's not just in America. It's in England, it's in Europe, it's in Japan, it's in Asia, it's in South America. It's literally all over the world.
Unemployment is the Achilles heel, with official rates of over 8% in the United States and some estimates as high as 18%. It doesn't matter what state you're in, it doesn't matter what country you're in, it doesn't matter what region of the world you're in. Everyone is experiencing pain in this economic crisis. Our society is one of consumerism, and our consumerism is backed by debt. We don't buy things that we can afford. We spend too much with money we don't have. Now we're in a bind because we don't have the incomes to match what we've already owed out. And this is why the consumer capitulating in the last 24 months is absolutely critical. Without the consumer, consumerism goes away.
Retail sales are now the lowest in 30 years, and in fact they're saying maybe the lowest since the Great Depression. Circuit City, bankrupt. Ann Taylor, Eddie Bauer, Talbot's, Lane Bryant in trouble. Pacific Sunwear closing all stores. Gap closing 85 stores. Mervyn's department stores out of business. Foot Locker, Levitt's Furniture, Pep Boys, Zales, Six Flags, JCPenney, Linens and Things out of business. Disney closing 98 stores. Blockbuster on the brink.
Who's paying the price in the current financial crisis? Doesn't matter if you're amongst the super rich or the super poor, everyone is feeling some degree of pain. The middle class today, cash-strapped and debt-laden, is already insolvent, and they're the ones who are hitting the unemployment rolls at record numbers.
The IMF has said we are now in a global recession, and everybody is now saying, well, it's really a depression.
And there's some mystery in the market right now, but I think the International Monetary Fund, the IMF, is setting up a system where there will be special drawing rights on a bank of currencies. It may include the Japanese yen, it may include the US dollar, it may include the British pound, it may include the euro. Whatever the constituent parts are of this potentially new reserve currency, what you're seeing is an instantaneous devaluation for everyone, and the rest of the world largely being marginalized unless they participate, unless they play.
I think it's amazing that people still have not done anything. They haven't taken action. They're stupefied and paralyzed by the fact that they're experiencing financial loss, and what they're pushing back to is hope, and it's not a reasonable, well-founded hope. It's hope that is based on fiction. We're in a different environment. We're in a very different landscape financially and economically.